Wow, what a pleasure to be here back on the stage today as chair of the Spanish Banking Association. Thanks to Santander for the invitation, and congratulations to Manolo, Barbara, Peter, and the team for great organization as always and amazing content. And thanks for providing me the opportunity to moderate or to lead this conversation among two of the most respected and knowledgeable leaders of the financial community in Europe. And I think I can say this with great confidence since I've worked with both of you and I've learned from both of you and continue to learn from both of you every day and for many years now. So this conference always takes place at crucial times. It started a few days after the fall of Lehman in 2008. And last year, I remember we were discussing the exit of COVID. The three of us were also on stage together with Burkhard Balz, you remember? And we had a nice, sunny background behind us. Big, bright sun, blue sky. I think today, well, the backdrop is not, it's not that natural, but it's not that nature-based, but it's cloudier in general, no? We have more clouds in the horizon. Larry Summers was mentioning some of the challenges we are facing, and this morning also Commissioner Hahn was mentioning how all these challenges are coming together. There are a lot of simultaneous things going on. And this, of course, makes predictions and conventional policy tools more difficult to apply. So it's not just the Ukraine war, which is tragic in so many ways. It's all these post-pandemic disruptions that are still feeding into supply chains, energy and food markets, and inflation. So I had the chance to attend the IMF meetings earlier this quarter with some of you, and my conclusions were very, very clear. Less growth, stickier inflation, higher rates, and higher risks worldwide. So, Governor, you were just in Frankfurt a few days ago, taking some very important decisions that affect not only interest rates, but also the TLTRO. And maybe you can provide us with some views on how the reasons behind these decisions and also maybe the ECB's current economic outlook.
Yeah, thank you. Thank you very much. And in particular, thank you to Banco Santander for the invitation once again. Maybe perhaps, Alejandra, it's important to clarify from the very beginning that our previous meetings in this event were always after the crisis started. So we were not anticipating them or not causing them for sure.
True.
No, coming back to the reaction of the European Central Bank during this crisis, of course, the starting point should be, although I guess is very well known among this audience, is the mandate of the ECB, price stability, and the definition of price stability that the European Central Bank does, which is to target inflation in the medium run. Okay? And this medium run horizon is particularly important when you are confronted with negative supply shocks, as has been the case in particular in the euro area. So what we've been observing in the inflation domain during the last year is a significant spike of inflation, that it has gradually become more persistent, and it has also broadened to most of the items in the basket. And we can even say that today, more than 50% of the items in the basket are confronted with an inflation that is higher than 4%. Okay, so it's a significant number. And this explains well what the reaction of the European Central Bank has been. So you have to take into account as well the initial position of monetary policy with an extraordinary stimulus that we had provided during the pandemic. The combination of these two things, of course, made us react the way we did. We started, of course, by stopping the net asset purchases of our programs, PPP and APP. And then later, starting with July, we started to increase rates by 50 basis points in July, and then 75 in the last two meetings. Our assessment today is one on which we already see that a significant removal of the accommodation of the basis, the starting point that we had has already been removed. But at the same time, based on the current projections, the current outlook for inflation, we are still of the view that there will be more need for rate hikes in the next meetings. Perhaps it's important also to clarify what would be the basis of our decisions. Of course, first and foremost will be the inflation outlook, an inflation outlook that, of course, also depends on the economic outlook, and it will depend, therefore, also on the higher probability of a recession that we are currently observing in the euro area. Second, it will also depend on the actions that we have already taken. And then third, it will also depend on the lag, and the implementation lag that these actions always have, and that will also have this time. So the combination of these three things, and in December we'll have new projections, macro projections, provided by the staff of the Eurosystem, will provide the basis for our actions in the future.
Thank you. And Jose Antonio, you can maybe help us to complete this vision, no, of the economy by letting us know how you see Latin America. We have Governor Campos here, who was talking about Brazil this morning, but you have a very broad vision of the region, and that's a region that's very sensitive to interest rate increases in the Western world.
Well, it used to be, yeah? I'm not sure this time, yeah? So it's true that the conventional way of thinking was the higher the interest rates in the US, the stronger the dollar. This means a kind of stress, financial stress for emerging markets, particularly for Latin America. This is the conventional way of thinking based on previous cycles. This time, we are not seeing this. So first, we are not seeing a depreciation of the currencies, quite contrary. We are not seeing late reaction from the central banks, quite the contrary. They reacted first. And we are not seeing a lot of external debt in a strong currency that normally triggers a kind of debt crisis. The amount of external debt is not that high in hard currencies. And finally, if we see the current account as not fairly balanced, and finally the other scenario, the behavior of the government, the fiscal policy during the COVID crisis has been less expansive. In general, I'm not speaking in general in Latin American countries that has been in mature markets. So this creates a scenario in which, given the quick reaction of the central banks, we are seeing, well, there were in the last couple of months, few countries in the world that got upgrades in expectations of GDP growth. And some of those were in Latin America, particularly in the case of Brazil. And, well, the FDI flows are still significant, and we are not seeing any damage on those. So for that reason, I'm more constructive. It's very helpful that Larry said that he wants to belong in Brazil. Mm-hmm. That, means that at the end, he shares some of the views I am expressing here, that this time, this conventional thinking of problems when dollar gets strong and interest rates get higher in the US, problems for emerging markets, particularly for Latin America, is not going to fulfill this time. I'm pretty convinced.
Certainly good news for the region, despite the challenging times. And Governor, now maybe you've given us a very clear message. Interest rates will continue to rise, and not only in Europe, of course, also in the US, most probably. And that will have an impact on the economy, no? So under this scenario, I would like to discuss what is the right policy mix, because we've also discussed fiscal policy to a certain extent this morning, and the Next Generation EU Fund, et cetera, in Europe. So maybe, you know, how do you see the role of fiscal policy under a scenario of higher interest rates, and what could be the role of these European funds?
Yeah, no, that's a very important question, Alejandra. I mean, what the message I'm trying to send here in Europe as what the role of fiscal policy should be is that we need to keep the coherence between fiscal and monetary policy. Mm-hmm. And of course, this coherence now should be interpreted in a completely different way to the one that was interpreted during the pandemic. During the pandemic, both fiscal and monetary were very expansionary for very good reasons. We were faced with an extraordinary shock. We were trying that this extraordinary but temporary shock, we were trying that it don't damage the economy on a structural manner. And I think with the combination of very expansionary fiscal and monetary policy, we succeeded in that. Now we are in a completely different environment. Inflation is very high. This is why monetary policy is reacting, and it will continue to react. And fiscal policy has to play also a completely different role. There is a role for a certain fiscal support, but this time it has to be focused, it has to be tailored to the most vulnerable companies and also, of course, group of citizens, in particular those that are being more affected by the inflation spike. We know that, for example, in the euro area, the inflation rate of low-income earners, for example, is 2 percentage points higher than for high-income earners. So I think it makes a lot of sense that fiscal policy focuses on supporting those that are more vulnerable. But at the same time, in parallel, it's absolutely crucial to emphasize that a generalized fiscal impulse is not needed, it's not necessary, it can be even counterproductive, because of course, this would mean that inflation will increase more and the reaction of the central bank, the European Central Bank, will have also to be more abrupt. So keeping this coherence is particularly relevant. We are also sending the message that whatever the measures that are approved, this should be temporary in order not to increase the fiscal imbalances that we have currently in many countries. And by the way, it's also very important in the European context to take into account that the use of the NG funds, even if there is a delay in terms of implementation, that there is a delay, we know that, but that they are also providing a stimulus to our economies. Mm-hmm. This should also be taken into account when judging the mix of fiscal and monetary policy that we need to provide to the economy in this very different context as to the one that we were facing during the pandemic.
Thank you. So temporary and targeted, right? A double T, no? I heard from the ECB. And José Antonio, I'd like to hear your views on this also, how best to mitigate the economic and social impact of consumer prices, and to what extent you think we need to design an adequate framework to distribute income losses, which are coming.
Well, we are suffering somehow we are poorer now than we were before this crisis. This is simple as that, yeah. So the question of all this discussion that is more is beyond a political discussion is how to share the pain, yeah. So Governor Campos this morning said there is a bill to pay, and well, it's approaching the time that the bill needs to be paid, yeah. Mm-hmm. So. Beyond the political choices, we need to prevent and this is what the governor is saying, the inflation to get going and going and going, enter into a vicious circle that deteriorates the whole economic situation and is bad for everyone else. And this is a question of sharing the pain. So it's a question of not to have indexed everything to the inflation, not to preempt inflation. The inflation normally starts in goods and ends up in the heads of the people. The economic agents, in a rational way, they try to preempt the inflation that is coming, and this creates the vicious circle. Central banks are fighting this, raising interest rates, cooling the demand, and trying to fight this situation. I'm not sure we have well-aligned fiscal and monetary policy right now, because I see that the fiscal policy is quite expansive, at least in Europe, also in the States. And I don't know up to what point the governor said we need to protect the vulnerable people, 100% agreement. At the same time, we need to make sure that fiscal policy is not affecting the transmission of the monetary policy. Because in that case, we are offsetting one with the other, and inflation remains there for a longer period of time. And then the bill needs to be paid. And this is important, that the bill to be paid in 2 dimensions, in sharing the pain, and second, COVID, in financial terms for the governments, was like a war. Suddenly, the level of public debt went up dramatically. And this is a situation that needs to be faced. Yeah? So some fiscal consolidation is needed, monetary tightening and withdrawing the liquidity support from the central banks create a situation that is not very pleasant in the short run, but it's what needs to be done in order to have a stable, solid economic growth and financial stability in the years to come. That's the view. I know it's difficult to take the pain, but I think it's really needed. Yeah. So sharing the pain is about the society as a whole. It's not only governments, it's companies, it's unions, it's all the economic agents need to be conscious that sharing the pain is what should be done.
Yeah, we have to work on that together. Let me turn now to the banking sector. I think we have some bright spots here too, because the starting point seems to be that banks are, better capitalized, strong financial positions. I think even the IMF in this year's GSFR acknowledged that banks will not be a problem in general. They will be actually part of the solution, as Ana Botín clearly said this morning. It is also true that banks are the most efficient transmission mechanism of monetary policy. We need to pass on higher interest rates to the real economy. No? So, José Antonio, what do you think about the role of banks? What role can we play in the scenario of lower economic growth and loss of purchasing power of families as a result of rising prices? What is our share in that collaboration?
Well, we are, as financial intermediaries, we naturally, part of our role is to transmit monetary policy to the borrowers and to the depositors, to the savers, to both sides. Yeah? So it's not just one-side equation. Yeah? So sometimes people focus more in one side. I will focus on both, because in the last 5 years or 6 years or 7 years, the monetary policy has been particularly hard with savers. Yeah? So for good reasons, but particularly hard with savers. Now, as intermediaries, we need to make sure that we do the adequate transmission of the monetary policy to both sides. That's where we are. It's true that through this process, and depending on the kind of long origination that we did in the middle of extraordinary circumstances like the COVID and zero negative interest rates, maybe a situation in which some of these borrowers are not, have difficulties in facing the payments of the loans. And this is I should say, this is a traditional problem of the banks. When the economy slows down, you may have some parts of your clients that have difficulties. Well, this is our job to deal with this. Yeah? It's our job to deal with this and finding ways that we can help and support those customers, accommodating the payments to the capacity of paying. A situation in which normally what happens with inflation at the beginning, you have inflation and these interest rates going up. There is a lag with the wages and other things catching up, and probably not 100%, but they're going to catch up. And inflation is not per se a bad thing. Some inflation is not per se a bad thing to repay loans. Yeah, because the loans are then, remember the last crisis, the principal of the loans gets depreciated vis-a-vis with the income of the borrower. So at the beginning it's a shock, but looking at in longer term, I think we can match this situation and to accommodate the payment capacity to the installments, the monthly or the quarterly payments, both for individuals and companies. And I refer to this not only to individuals, also the companies. Some companies, the inflation, they can do the pass-through of the inflation, some others they cannot. And those are suffering the same than individuals. It's not, we don't call disposable income, we call net income, but the end is the payment capacity gets hurt. And it's up to us, and we're going to look for solutions for this. This is something that we are well equipped to do that. We were not well equipped to deal with COVID, to be honest. Yeah? Mm-hmm. But this is something that is in our ADM, And our origination always think these kind of situations. And we think all the banks that I talk to, they are ready to deal with this type of situation.
I certainly agree. I see that the sector is very sensitive to the situation and looking for solutions, as you just said. And Governor, how important is profitability? No? Banks are finally increasing or recovering profitability, and I understand we all see this as a line of defense for a certain future. No? How important is this to shield also the credit channel?
No, of course, it's important. It's very important. I mean, you were mentioning this, Alejandra, in the question that you raised to José Antonio. I think it's an important strength of the European economy, of course, of the Spanish economy, that now we have a banking sector that is more resilient. And let's take only 3 metrics. Profitability is higher than before the pandemic. It's not only higher, but now it's higher than the cost of capital. Second, NPLs are lower, which is, of course, also very important. It's due, in particular, to this monetary policy and fiscal policy reaction that was very bold during the pandemic and, to a certain extent, has shielded the balance sheet of the banks during the crisis. Well, all this together makes the bank to be in a position to be part of the solution again in this new crisis. But at the same time, we have to take into account that the crisis will have an impact, a damage, also on the banking sector. Profitability in the very short run has increased, and has increased in a very significant manner. And we know why, basically because we are moving from negative interest rates into positive territory, and this has a positive impact on net interest margin. But at the same time, if the slowdown of the economy materializes, is already materializing, we will be seeing lower volumes of credit, we will be seeing an increase in NPLs, we are already seeing an increase in the cost of funding of the banking sector, and the net effect of all this, with different lags, in the medium run, might be negative. And this is why, from the central bank perspective, from the supervisory perspective, what we are asking to the banking sector is precisely to use the time lags of these effects in the following sense. Since we are now observing a positive impact on profitability of the banking sector, but we can anticipate a negative effect on the medium run, the prudent thing to do would be not only to keep resilience, but even to increase resilience in the short run, so that we are in a better position to face the second phases of the crisis, where those risks will materialize in the profit and losses accounts of the banks.
Thank you. I'm going to turn now to more structural challenges and opportunities of our sector, which are the digital transformation and the green transformation. There was a panel this morning, and I'm sorry we missed it because we were in this meeting with the German governor, but there was a panel on the future of money. And I think it's really a privilege to have you here, Governor, who maybe tell us how the ECB is preparing for the European CBDC, no? For the European, the digital euro, because that was certainly an issue for discussion this morning. Yeah,
no, of course. Well, maybe the first thing to say about this is well, that the main objective of the European Central Bank when starting with this project of the digital euro is trying to preserve the value of public money as an anchor. Mm-hmm. Okay? So, in other words, moving from physical to digital should not change the role of public money as an anchor of stability. And this is why we started with this project. We are in the investigation phase. We haven't decided yet whether there will be a need to launch a digital euro. It might be very well the case, but we want to be sure that if this is the case, if the conditions for launching a digital euro are there, we are technically in a position to do so. And for me, what it is relevant in the investigation phase is precisely to find the right way from a technical perspective so that on the one hand, yes, we achieve this objective of keeping the anchor of public money in a digital format, but at the same time that we don't create other collateral effects, in particular on financial stability. Okay, and this is probably the most difficult task that we are facing, apart from all the technical issues, okay, which are of course very, very complex. But I mean, the banking sector has already been facing these challenges for many, many years, and they were successful in responding to them. For us, is to a certain extent new, the technical part of it, but I think we can be confident that we will also provide the right answer. But the difficulty for me is precisely to find the right balance so that, yes, we meet the target, we meet this objective, but at the same time, we don't create any financial stability concern, which, of course, is also our aim.
Thank you. Huge project. José Antonio, views from the industry. What do you think about this?
Well, the CBDC have two angles. One angle is the payments angle, so being more efficient in the way we do payments. This is, well, seems to be clear. I'm not an expert on this, but seems to be clear that, well, the technology may bring some extra efficiency into the payment system, being national and mainly international payment system being more efficient. This is one angle, that if we are trying to solve this problem or to improve the efficiency in this angle, is clear. That seems to be pretty clear. The other is the financial stability, that is much more complex. Yeah? So on the financial stability side, well, you have the people that goes to an stream and say, so, well, having the right to hold accounts in the central bank, and in this case, we don't know how the system works. In this case, disintermediation of the commercial banks, as we know, become an issue, and how to keep the financial stability going forward is the other question. Those two questions, well, in the middle there is plenty of solutions there, but to me, using the technology, being the digital euro and any other technology, in order to make the system more efficient is something that we must do. There is no question on this. Putting at stake financial stability with experiments of this very nature is extremely risky to me. Okay, so, and this is probably why the ECB is taking this approach of doing some research, start discussing, see what we can do, what we cannot do. And then this is, depending on the jurisdiction, how efficient the payment system, the already system payment system is, the perceived need of the digital currency, aside from the geopolitical reasons that I am not going to elaborate on geopolitical reasons of the digital currency, is more, the perceived need is higher in countries or in regions where the payment systems are not very efficient, is less so in countries or in regions where the payment system is more efficient. The financial stability, I think there is a general consensus among the central banks that is a big step that need to be think twice before you enter into this territory that can be certainly frightening or difficult.
We don't have much time left, unfortunately, but I think we cannot leave the stage without a minute about the other major revolution, no, that the sector also needs to address and accompany our clients, etc., which is, of course, green, no? How to address climate change. And I'm sure, Governor, you can give us some your perspective as a supervisor on this.
Yeah, well, one minute. Of course, for us, from a purely financial stability point of view, this is very, very important. We know that climate change can create both physical and transition risks, and this is why we are taking it very seriously. And for example, with my hat as chairman of the Basel Committee on Banking Supervision, what we are basically is trying that the banking sector incorporates all these risks into their risk management functions. How we're doing this? Well, of course, first is data. disclosure of information is absolutely crucial, and we are working together with the Financial Stability Board, with the NGFS, and other global fora in order to provide a common and homogeneous metrics for these disclosures. Second, we are also working on the supervisory part. We have already published some high-level principles for banks and also for supervisors on how to manage this risk. We are also working on a scenario analysis that could eventually also be incorporated into Pillar 2 in the framework. And then, of course, we are also analyzing Pillar 1, so the regulatory part of it. So to what extent there are gaps in the current regulation that could be an impediment for banks to incorporate in an adequate manner this risk. And I think with all this, I think we will be making not only a contribution, which is of course our mandate in terms of financial stability, but also indirectly or even very directly in the fight against climate change.
José Antonio, a word from the industry on this one?
Well, this is, as the governor said, the first question we face is data. So for that reason, at Santander, we are developing the sustainable finance classification system that, well, is badly needed in order to avoid any kind of mistakes, greenwashing and the others. And immediately after this, well, in some cases it's relatively easy, or it's very easy to say this is green, this is not green. When you substitute coal by solar, is easy. The problem is in the middle, as always, yeah? So there is a large gray area where the 80% of the economy sits. And this gray area is where we are in the learning curve. So in order to find, first, if there is a technical solution for the problems, that in some cases we have some, in some other cases we don't, knowing that this exists and offering to our customers how to deal with this. Yeah? So, and this is a long journey. So we are, the obvious thing is in the energy sector. This is the obvious thing. Everybody's working on this. I think to the way I see the companies are working on this, they have their own internal targets, they are committed, and all these things. And in the banks, I feel more responsible, let's say, when it comes to individuals, to the families, so housing and all these things, or when it comes to SMEs, where the access to information and potential technologies that may improve their capacity to be more friendly in climate change needs additional work to be done, and is where we feel more responsible in relation with this.
Well, thank you so much. I have a very clear message here that says time is up. It doesn't say it's lunchtime, but it could also say it's lunchtime. We've covered a lot of ground. It's really been an honor and a pleasure. I think this is the last one with José Antonio, CEO of Banco Santander, but I'm sure he will be back on this stage with his new capacity. And you will continue to share your views and wisdom with us. And of course, you also, Governor, as Governor and as Chair of the Banking Committee in Basel, which is so important. So thank you very much for this wonderful discussion, and we'll keep in touch. Thank you.
Thank you.
Thanks, Alejandra.